Hi guys, and welcome to the Mindset Investors podcast. And this is the number one finance podcast, and this podcast is hosted by me, Roshan. And if you like our podcast, please share it with your friends and family so that more and more people can listen to our podcast, which can also motivate us in bringing more and more episodes. Also, if you haven't followed us on Instagram, do follow us there, as we will be posting content on investing, trading, and personal finance. Also, if you want to start your investing and trading journey in stock market, then we have given you the link to open the Demat account in Upstart. So when you open it, you get 3 days of free brokerage charges and you can start to invest and trade in stock market, which can also be a first step in attaining the financial freedom in your life. So the link is given below to open the Demat account. And in today's episode, we are going to talk about some of the points which we need to know before investing in stock that are trading near the 52-week low price. So before this, we would like to say that we are not a SEBI registered financial advisor, so whatever information we are sharing here is only for the education purposes, as we are not responsible for any profit or loss made by you. So whatever the points I'm mentioning here is only for the knowledge, and you need to do your own analysis or ask your financial advisor before making any step. So now let's get into today's episode. But before this, I would like to say that not all 52-week low stocks are undervalued, because this is one of the main assumptions which is joined with the new investors, and they try to enter into the stock when it is at 52-week low, saying that it is undervalued. Even if the stock hit the 52-week low price, they might still be overvalued, and with just the 52-week high and low price, we can't say the stock is overvalued or undervalued. So currently there are many stocks that are trading near the 52-week low price, like Thyrocare, Hero, Paytm, Zomato, Future Retail, etc. So many investors, even many of my friends, are entered into Paytm and Zomato shares just because they are trading at 52-week low price. So this episode is for all the investors who needs to consider few points before investing in shares that are trading at 52-week low price. So what is 52-week low stock? It refers to a stock lowest price during the 52-week period, or approximately during that year. Consider a stock X, and it is trading at 500 rupees on December 1, 2020, and it has made a high of 700 rupees during the mid of 2021, and the price started to decline, and it once again comes back to 500 rupees. Then one may consider that the stock is trading near 52-week low price. Similarly, we also have something called as the 52-week high stock, which means the stock is trading at the highest price during the 52-week period or during that year. So now you might be wondering why this 52-week measure is considered. Generally, this can be considered as a support and resistance for the stock. Like if it is trading at 52-week low, then it might take some support there, or if it is trading at 52-week high, then it might take some resistance on that price. But this doesn't always happen. Sometimes the stock may take support at 52-week low and the stock price can go up, or sometimes the stock can break the support and it can continue to fall. So by using the 52-week high and low as the support and resistance levels and studying the stock price behavior, traders and investors can decide if it is the right time to invest in or exit from the stock. This is one of the reasons why the new investors try to enter into the shares that are trading at 52-week low or exit at 52-week high price. But before entering into the stock with 52-week low price, we need to consider a few points. Like number one, we need to find the reason why the shares are falling and reach the 52-week low price. And what is the reason behind it? Is it because of a bad quarterly results, or decrease in FII or DII or promoter holdings, or if there is any legal action taken under the company, etc. And the second point is that we need to know whether market is the reason for the stock to fall. Like during COVID, all the markets were down and almost all of the shares have hit the 52-week low price. So you need to consider this point too. And the third one is that you need to do the fundamental analysis and check if the company is fundamentally strong. Like we need to look into its ratios, Piotrowski score, and check if the share is fundamentally sound. And the fourth one is that we need to have a look into the chart and we need to find what the chart says. We need to find the next support and resistance and the trend in the daily, weekly and monthly chart, and try to check if you can find any trend reversal or any chart patterns is formed. And the fifth point is that we need to know whether this is the correct price to enter into the stock. Try to find whether the stock is overvalued or undervalued. Some stock will still be overvalued even though if it is trading at 52-week low price. So if you can answer all these questions and if you feel like it is good to enter into the stock, means you can enter, or you can enter into some other shares, as there are many companies trading in the stock market, and you enter and those and make profit. And you need to be cautious when investing in stock trading at 52-week high and low, because it requires more risk. If you are a risk taking trader or the investor, then you can enter, or if you are not willing to take risk, then 52-week stocks are not suitable for you. So investing in 52-week low stock might be a good strategy, as it gives you the comfort that you have picked stocks at a low price. But in reverse, this may completely backfire on you too. So do your own analysis or ask your financial advisor before investing into the stock that are trading at 52-week low price. So that's it guys for today's episode, and if you love our podcast, please do us a favor, share it with your friends and family, as that is the only way this podcast can grow. And if you haven't followed us on Instagram, do follow us there, as we try to reach more and more people and make them know about stock market. So that's it guys, thanks for listening to this episode, stay safe and see you in the next one. Bye bye.